CNBC TV 18, celebrating 15 years of leadership.
The new CPI series puts the January inflation at 5.11%, much lower than street expectations. Markets now expect more rate cuts. However, factories continue to struggle as industrial output for December grows by a mere 1.7%.
Ukraine and Russia agreed to a ceasefire, lifting sentiment across global markets. Dalal Street perks up in the last hour as the Nifty scales 8,700. European markets surge over 1%. Crude prices rally 2%.
Fact that 4 elections have been won and one has not been won is absolutely no ground for believing that there would be any slowdown on the path on which we have undertaken.
The Delhi debacle will not hamper reform, says Finance Minister Arun. Jaitley. US Treasury Secretary Jack Lew says he expects India to stick to its fiscal deficit target.
The government's plans to auction coal blocks receive yet another jolt. The Jabalpur High Court orders the centre not to auction 2 coal blocks run by BLA Energy. The government is confident, however, that auctions will go on as planned and shortlists 134 bidders for the first round, where 23 blocks are up for grabs.
I think there is opportunity out there, like you heard in this current panel. Yeah. There are threats also out there.
Also have to look at what's happening around the world. There continues to be volatility.
It's words of caution from Wipro and Infosys on day 2 of the NASSCOM Leadership Summit. Wipro expects new deals to shrink. Infosys says the environment remains volatile and Europe is still under pressure.
Prime Minister Modi meets Delhi's Chief Minister-elect Arvind Kejriwal, declines his request to attend the swearing-in ceremony due to prior commitments. Sources say Manish Sisodia could be named Deputy Chief Minister.
You are welcome. Enjoy. This is going to be a fantastic event. Great 6 weeks.
And on behalf of the ICC, I am proud to unveil the ICC World Cup.
And the celebrations begin as they do here tonight.
Well, it's getting closer and closer. The world's largest cricket carnival is all set to begin. In fact, that is one of our Twitter questions tonight. Do you think Team India can retain its crown? I can tell you that the responses that we've got so far don't seem to suggest so. But Surbi, has the World Cup bug bitten you yet?
I'm just holding my breath, Shireen. I don't know for how many weeks till we get that answer. Can we retain the crown or not? That's critical. But it's not just me, Shireen. Sponsors are really shelling out, top dollars. And hold your breath here, a whopping 1,000 crore rupees. In fact, we have a special report on that coming up. But first, a quick check on the day's trading action. Now, what looked like a tepid day of trade took a dramatic turn in the last few minutes, all thanks to Vladimir Putin's decision to drop the guns in Ukraine. The Sensex is now within striking distance of 29,000 as shares rallied after Russia and Ukraine agreed to a ceasefire. The Nifty gained over 80 points to reclaim the 8,700 mark. Mid-caps continue to outperform the blue chips, with that index adding another 150 points. Shireen?
Well, that's right, Surbi, but let's talk about the big global story, because that has what has impacted not just Dalal Street but global equity markets. After a 17-hour meeting, Russia and Ukraine have finally decided to call a ceasefire. In fact, Vladimir Putin making that announcement that ceasefire comes into effect on the 14th of February. But it's not as if everything is done just yet. There is a glimmer of hope. The French president has said that this deal offers only a glimmer of hope and asserted that there is a lot of work that needs to be done. The Eurogroup meeting has ended with with Greece and the European Union unable to reach a deal on the Greek debt crisis, by the way. However, commentary from both sides suggests that there is still hope for a deal. The Eurogroup will meet with Greek officials again on Monday. The country's Prime Minister has told reporters he's confident that a solution can be found. So there's good news coming in from Ukraine, from Vladimir Putin. Of course, the uncertainty as far as the Greece situation is concerned remains, Surbi.
Right, and of course all that is having its impact on global markets, which are cheering this peace deal between Ukraine and Russia and Europe. We're seeing the FTSE seeing some minor gains, but it's really the German DAX and the French CAC where most of that action is. Those indices, the CAC up 1% and 1.5% up on the German index. In the periphery, again, there's great enthusiasm. Markets are rallying even harder. The Italian MIB and the Spanish IBEX, as we can see, up over 2%, and the Russian market itself is up over 3% as of now. Across the Atlantic as well, it's looking good for shares on Wall Street. We can see a 0.5% increase on the S&P 500. The Dow a shade lower than that, but still in green territory. And of course, the Nasdaq is running away with a 0.7% increase.
Well, that's the action as far as the global equity markets are concerned. But let's now talk about the big macroeconomic headline that's come in on the inflation front. Inflation has come in at 5.11% versus 4.28% for the month of December. But remember, this data has been calculated on the new base year, which has come into effect. We've got disappointing news as far as industrial production is concerned. IIP looking weak at 1.7%, so the factories continue to sputter, but it looks like the inflationary trend is going to be on the downside. And will this now allow the Reserve Bank more flexibility and more room for frequent cuts, and perhaps more cuts than what the street was expecting? To decode all of this and the confusion surrounding the data, let's go across to Lata. Lata, what does this mean now for inflation, for IIP, and for possible Reserve Bank intervention?
Well, at the moment, there is a lot of confusion about how to back calculate the new series of inflation numbers. I mean, 5.11 is good or bad depending upon what was December and November, but there is still some confusion that 4.28% put out by the CSO is still being contested by various economists. It is not as if the jump is from 4.28 to 5.11 because there is a base to be contended with. Leaving the confusion aside, the economists are happy with that 5.11 number. It indicates that inflation is definitely slowing down. The best takeaway is that services inflation, which is represented by a term called miscellaneous, includes housing, educational, transport and such other services, that has fallen to 2.98%. Now that is a very difficult number to rein in, and since that has fallen, that is what you really approximates the core inflation. Since that has fallen to sub 3%, there is a general feeling that inflation as a problem is definitely countered. Food inflation, however, comes in at 6% in the new series. That's not a very joyful number, especially because under it, milk, fruit and vegetables, which have been notoriously difficult to rein in, are all at around 10%, 9 to 10%. So that is the only small element of fear. Otherwise, the number is seen as indicating a control over inflation, and therefore most economists we spoke to have revised higher the number of rate cuts to be expected from the Reserve Bank. JP Morgan was expecting one cut, only one more cut. Now they expect two more cuts. SBI was expecting 2 cuts. Now they expect 3 cuts. So the general feeling is that going forward, inflation is going to remain under 5.5% up until this March itself. So the April credit policy will be looking at a 5.5% inflation. And even if you project it forward to 2016, expectation is that it will remain under 6%. So there will be comfort to cut rates. That is the main takeaway, that the number of rate cuts, if anything, will increase, and inflation, if anything, is lower than what the street estimated. On IIP, as you said, the numbers are looking extremely discouraging. 1.7 is as bad as the street expected. Street expected 1.8%. And within that, the consumer numbers, the consumer non-durable numbers are all not very heartening. Consumer durables has contracted by 9%. So growth continues to remain a bad picture, and inflation is certainly better than expected.
All right, Lata, thanks very much for joining us. Good news and bad news. Good news on the inflation front. Bad news continues as far as IIP is concerned. But let's go across to CNBC TV 18 Sapna Das. She caught up with India's chief statistician, T.C. Anant, and asked him if this new formula would lead to a declining trend for inflation in the coming months. Let's listen in.
Series tends to show inflation rate in general slightly lower than the older series did by about 0.5% at maximum. But if you take the new series as it has come out, the inflation rate in January is marginally higher than the inflation rate which had come out in December.
Right. So if you compare it under the new series, it's on the higher side, 4.28% for December versus 5.11% for January on the combined basis. But for the moment, we can also say that under the new series as such, there could be some respite on the price front.
It's really a method of calculation. So all that the new series method of calculation of using a geometric mean as against arithmetic mean gives you a slightly lower inflation rate compared to the old calculation.
And also about the baskets, I would like to mention some of the food, like for instance, we are moving away from food to non-food items. That could be one of the reasons?
Partly. We have changed the weighting diagram reflecting the current consumption pattern, in which there is a marginal decline in the share of food in the total basket and a marginal increase in the share of non-food items in the total basket as reflected in the consumption patterns.
All right, those are the new retail inflation numbers, which are not looking all that bad. Now, moving on, with the BJP almost decimated in Delhi elections, there have been concerns that the momentum of the reforms process may slow down. However, Finance Minister Arun Jaitley today assured that the BJP's defeat in Delhi will not have any impact on the Modi government's efforts to revive the economy. Hinting at a reforms-oriented budget, the FM said that economic revival was necessary also to meet the government's social sector commitments.
We believe that the kind of reforms we have undertaken are certainly going to bring in investment, generate jobs, improve the quality of life of people, and also help us in alleviating poverty levels. It's only this that will give the strength to the Indian economy to even be in a position to expand a large number of our poverty alleviation programs and social schemes. And therefore, the fact that 4 elections have been won and 1 has not been won is absolutely no ground for believing that there would be any slowdown on the path on which we have undertaken.
And that's the Finance Minister allaying concerns that have arisen post the BJP's decimation in Delhi. The concern is that the BJP will now be forced into a corner, may perhaps review or rethink its economic policies. Remember, there is a crucial meeting between the BJP and the RSS. In that sense, the parent, the think tank of the BJP on Sunday. So there has been a lot of concern on what the Delhi verdict could mean as far as the government's economic policies are concerned. The Finance Minister there saying that the reform process and the reform agenda will continue. He was in fact speaking at an event which also saw Treasury Secretary Jack Lew making his stop in Delhi. Remember, he was in Mumbai yesterday meeting captains of industry, and the Treasury Secretary pointing out that the Indian government needs to do more to rein in subsidies and keep the deficit in check. Listen in.
The issues that I referenced already show the kinds of progress that can be made by rebalancing priorities, by making sensible changes that free up resources so that you can have fewer subsidies that distort the economy, more investment in things like infrastructure that help build the economy, and a fiscal path that makes sense. So I'm not going to prejudge the budget that the minister is working on.
The government's plans to auction coal blocks received yet another jolt today. The Jabalpur High Court has ordered the centre not to auction 2 coal blocks which are run by BLA Energy. The court quashed the decision to change end use of these 2 blocks from steel to the power sector. This comes just a day after the Delhi High Court removed 3 coal mines run by Jindal Steel and Power from the auctions. Speaking to CNBC TV 18, Ravi Uppal, the MD and CEO of the company, made a plea to the government asking it to take a pragmatic view.
These 2 plants, we have invested close to 31,000 crores. And there's so much at stake. And therefore, if we don't get the coal supply from these mines, the projects are simply not viable. So it's really our sort of ardent plea to the government to take a very pragmatic view. It's not a question of just JSPL's investment, but the investment of India in the project.
Well, that's JSPL. Remember, 3 blocks of JSPL are now off the auction table because they have been granted relief by the Delhi High Court, and BLA Energy's 2 blocks have also been given relief by the Jabalpur High Court. So 5 blocks now off the auction table. So while the litigation continues, the government is hopeful that the auction process itself will not be derailed. Anshu Sharma and Ashmit Kumar tell you that the coal ordinance is valid till the 5th of April, and the government is hopeful that it will clear the passage of Parliament, and of course that the auction process will not be stalled either. Take a look.
Power and Coal Minister Piyush Goyal has no doubt that his ministry will meet the March 31st deadline for auctioning of coal blocks. But nearly 10 of the coal blocks scheduled to go under the hammer are involved in various cases across the country. And to add insult to injury, the Delhi High Court and the Jabalpur High Court have pulled a few blocks out of the auction process. But the ministry has already pushed ahead with the first round of technical bidding and says that since the coal blocks to be allotted outnumber the legal cases that are pending, these cases will have no bearing on the auction process.
The decisions so far have not commented upon the ordinance per se. So ordinance stands. Ordinance has no provision of the ordinance has been struck down. What the high courts have directed are certain process related issues. And that is what gives us hope that we should be able to continue with our auction. The government has taken a decision to add another 9 blocks to the list of blocks that have to be allotted. So originally there were 36 blocks as a part of the overall 101 blocks that we had considered. Now this list goes up to 110.
So 9 coal blocks have been added to the list, more than replacing the 5 blocks that have been knocked off. Swaroop is also quick to add that the blocks which are not at the center of legal battles will be reviewed by the technical committee, and a report on these will be submitted soon. However, there is still no final word on whether the government will challenge the High Court orders in the Supreme Court. In the meantime, the Coal Ministry is working on a system to keep these mines in play.
We have taken a clear decision that custodian will be appointed for such mines where we are unable to complete the auction process to ensure that production continues.
So far, 134 bidders have qualified in the technical round. 48 of these belong to the power sector and 86 belong to the unregulated sectors like steel, cement and iron. The ministry will now take a mine-wise approach when it comes to opening the financial bids. And the e-auctions of 20 coal blocks will begin on the 14th of February and end on the 22nd of February. In New Delhi, with Anshu Sharma, Ashmit Kumar.
Now, after the coal auctions, the government's plan to auction telecom spectrum could face legal scrutiny. Responding to pleas by leading telecom companies against the auction, the government has argued before the Supreme Court that it stands to lose out on revenue worth 80,000 crore rupees if the upcoming auctions are stalled. Ashmit Kumar joins in with more details. Ashmit, run us through what the court said and what the government argued.
Well, clearly the government's auction plans, not just with respect to coal but also with respect to spectrum, is facing legal scrutiny. Now, importantly, as far as this case is concerned, the 3 major telcos, that's Bharti, Idea and Vodafone, had moved the Supreme Court seeking extension of their licenses, which are due to expire this year in 2015. Now, importantly, the government, the Supreme Court rather, made a very pertinent observation, or rather questioned the government over what the fallout would be if a license extension is in fact allowed to all these 3 telcos. Now, the government made a 4-point reply. The first up, government replied by arguing that this is a final decision that has been given by the government and that it should be accepted by the telcos. The next point that the government counsel, Solicitor General raised was that if a license extension is allowed, it would result in a very limited amount of spectrum for the auctions, making the auctions unviable, thereby directly impacting the government's ability to realize the 80,000 crore rupee figure that has been targeted from these spectrum auctions. Furthermore, the government went on to add that there have been previous instances of license extensions not being granted, and the telcos have still participated. Hence, the government argues that even in this case, the telcos should come forth and participate in the upcoming auctions. And finally, the government cited urgency, citing the deadline of the end of February. The government plans on wrapping up with the spectrum auctions by the end of this month. So that's another important point that the government has raised. But at this point, questions galore, tensions galore as far as the government is concerned. We can expect more clarity on the 18th of this month. That's when the Supreme Court takes up this case for further hearing. Back to you.
All right, Ashmi, thanks very much for joining us with those details. Let's get you the latest now from the day 2 of the NASSCOM Leadership Summit. The commentary coming in today has been cautious. Comments coming in from both Wipro and Infosys seems to suggest that the global environment is volatile and Europe is a spot of bother in particular. TK Kurian of Wipro says that while new deals are coming in, the existing pipeline is seeing shrinkage. And Praveen Rao of Infosys believes that volatility will continue to be a worry for tech companies going forward. Listen in to their comments to Kritika Saxena.
While IT players are talking about a robust deal pipeline, on day 2 of the NASSCOM India Leadership Summit, a lot of concerns were raised and finally a realistic tone was understood where IT companies are now facing the fact that the traditional core IT services that contributes to majority of revenues are actually seeing a decline by 70 to 80%, and the digital spending uptick of 25 to 30% cannot make up for the loss in traditional services. So individual IT companies will now have to adapt to the changes and change their structure. Will they be able to do so is a question mark, but players like Infosys and Wipro that are already at the helm of change may find it slightly difficult to be able to adapt as fast as other players.
There are threats also out there. So I think how every company kind of shapes up opportunities and base it versus threats, that's where the impact is going to come.
If you look at NASDAQ prediction, you also have to look at what's happening in the currency thing. That's one thing. So I think it's probably understated by 2-3% because of the currency impact. Then you also have to look at what's happening around the world. There continues to be volatility, while in North America things seem to be reasonably better, greater deal of confidence. But in Europe you still see undercurrents of challenges, Greece and other things. Then you are seeing the oil price, impact of oil price. So in some industries it could be positive, some could be negative. So the situation continues to be a little bit dynamic and volatile.
IT and BPO players at NASSCOM are also hopeful that the government's digitization drive will be able to bring in a significant uptick in revenues at least by mid-2016 or mid-2017. In Mumbai, Kritika Saxena.
All right, moving on. The new Modi government is doing a lot to make it easier to do business in the country, but it seems to have miles to go before India's ranking in this area improves significantly. That's the word coming in from captains of Indian industry, including Sajjan Jindal, Dilip Sanghvi and Tulsi Tanti, who together command a market capitalization of nearly 5 lakh crore rupees. However, speaking at a conference on how to build a new India organized by Antique, these industry captains agreed that the government's efforts would not amount to much unless corporate India pitched in as well. Here's a list of areas they believe have seen some progress and some areas where a lot still needs to be done.
Up the confidence level that we are with you, we want to support you, we want industry, we want manufacturing, and that is what this government over the last, whether it's the Prime Minister or his colleagues, they are giving this confidence back to the investor community, and that's, I think, the first very important step. Last in the UPA 2 where we suffered was that there was no clarity of thought whether the government wanted projects to happen. One wing was saying, or one arm was saying that we have to move forward, and the other one was saying no, we have to go back. Now this government is putting all those things into order, and similarly on the mineral, on the ordinance that they issued on the iron ore and the mining minerals. There also it's become very clear that now it will be through the auction route, that through transparency route that this mining will be done. So I think over the next 2 years, my belief is that all these large projects which are mineral-based projects will get sorted out.
The signals are very clear that on the ground demand has yet to pick up. And until I think the demand really picks up, I think the consumer industry is still not feeling the positive vibes that we see in the environment.
We see that availability of graduates from college who are employable is limited. So typically most of the people that we hire, they go through an extensive training program. So I think the important focus before we can become a supplier of products globally is to look at education, create capacity in our education system to generate employable youth. On another side, you have industry problem of not getting enough people that of the skill that they require. So we have to find a way to bridge this because manufacturing, unlike services, will require specific skills and capability for us to succeed and to be able to compete globally. The other issue is the issue of innovation for our business. Philosophically, as a country, we've never given premium for original thinking. And it's easier to copy, it's safer to copy because you have less risk of failure.
We don't have very quick redressal system on dumping. So when, for example, let's take an example of Russia and Ukraine, where their currencies have crashed by nearly 100%. They've become double of what it used to be. And Russia, demand within Russia and Ukraine has collapsed. So they are now dumping steel into India. So our government does not have a very quick mechanism, or even the industry is not prepared to apply to the government to take a very quick action on this redressal, to bring in countervailing duties or bringing in anti-dumping or safeguard duties. So now the industry is working together to create this concept, and thereby we are going to we are already in discussion with the government.
I think lot of bureaucratic restrictions in research. So for doing animal experiments, for import of large animals, for let's say doing phase 1, phase 2 studies, human studies, simple issues is that let's say when you're doing clinical trial for a cancer drug, let's say prognosis of patient will die within, say, some virulent cancer will 3, 4, 5 months. So there would be some deaths in the clinical trial. Possibly because of the drug, the number of deaths may be lower than what it would have been otherwise if they were not treated. But the regulatory process that is now in place for any company to do clinical trial in India, and the kind of what you call onerous responsibility on the sponsor for any kind of potential, say like normally in India you can't do a placebo control study. Now globally you can do placebo control study. So large number of unrealistic restrictions prevent the industry to be able to invest in research.
The 2-3 policy initiatives already government has taken, which has accelerated the investment into the industries. So that is moving in the right. But still, when we see the size of the target versus the momentum is not good enough. I think 200 gigawatt targets, and even countries' future requirement 30% energy, we have a home resources, wind and solar. It's a huge potentiality is there. We have a technology in-house within the country. We don't require dependency on technology. So that competency, we are exporting technology to develop economy also. I think the more focus area is required, the financeable PPA, number one, the priority, and security of the payment. Because that is the key bottleneck of the unlock the size of the market.
Well, prescriptions for change and growth coming in from leaders of Indian industry. On that note, it's time for us to wrap up this edition of India Business Hour. Global equity markets reacting positively to the news coming in from Russia and Ukraine. But we'll leave you here tonight. From all of us here, goodbye. Thanks for watching.